So actually, I was thought of presenting a PPT actually, but I today only I just found out a PPT is missing. So okay, let me just make it somewhat less formal, so that we just don't need to go step by step. I hope everyone understands about the importance of mutual funds, right? Basic about investing, right? Maybe I can just start with that importance. You're able to see here. Currently, our inflation is at 6%. Okay, I just don't want to prove anything on that. It's around 6%. So, a 1 lakh rupees currently, which you're using after 10 years, will be only 55,000 rupees. I hope everyone can see my screen, right? G, நீங்க கொஞ்சம் கன்ஃபார்ம் பண்றீங்களா ஆக்சுவலி? என்ன யாரோ ஒருத்தர் கன்ஃபார்ம் பண்ணா ஈஸியா இருக்கும். யா ஓகே கூல். ஓகே ஓகே. நீங்க அன்மியூட் பண்ணீங்க ஜி. ஏன்னா அங்க சவுண்ட் வரல பிரச்சனை இல்ல. ஓகே கூல். கூல் ஓகே. So, first of all, the importance of investment is that inflation will always eats our money. Even though we are not doing anything wrong, eventually the money will decreases based on the inflation. And currently our inflation is 6%. When I say the current inflation, I am talking about the consumer price index inflation. That means general inflation about the money. Okay, but when you take into account of the medical, educational kind of inflation, that is more than 6%. I hope my voice is audible to everyone, right? And my face of voice is okay. Or do you want to reduce the speed, something like that? Cool, cool, great. So yeah, so what I'm saying is only the consumer price index, that is the inflation related to the purchase power of the money, that is 6% per annum. Okay, but when you consider about the medical inflation, it is around 12% in India. And for education inflation, it's around 14%. I remember I studied my 12th standard with the overall payment of around 6,000 rupees. Okay, that's a privilege for me in central government, but for average it's around 60,000 rupees for a 12th standard person to get graduated from the high school. But now you always know, already everyone know, for LKG they are asking for a joining fees of 1 lakh rupees. So this shows the inflation, the percentage of inflation in a educational institution, that is around 14%, and for medical it is 12%. Okay, but okay, let's focus only on the consumer price index as of now. That is nothing but the purchase power of the money. So now if you can able to purchase something with 1 lakh rupees, okay, the same thing if you want to purchase after 10 years, you require 1,79,000 rupees. I hope you can able to see my screen, right? Just a minute, I'll just open the point as well. Yeah. So the same amount, for example, if you're just purchasing a car, say for example 1 lakh rupees today, that same car without any modification, it will be required at around nearly 2 lakhs rupees after 10 years. That is the power of inflation. So even if you think your money is safe, okay, in a bank or any in your bank locker or in your bureau or any showcase, it will gradually decrease its value. So that is the sole purpose of investment. So this is the main reason we actually are going for investment. And for understanding, inflation in India is 6%. But when you go to some developed countries like US and UK, it will only 2 to 3% only. It will not be more than that. But when you go to some underdeveloped country like some African countries, it will be like 10% or 15% like that. So that is the reason only most of the African countries don't have their own rupees. I mean own currency. They follow dollar because their currency has been very much deteriorated actually when compared to the dollar rate. Like if you have like 1 lakh rupees, Indian rupees in the country, you will be a richest person in the country. Something they kind of like that. Okay. So I hope so far I just made you understand why the investment is important, right? You can reply actually, anyone. So you understand about the importance of investment, right? Yeah, I hope most of them already know that. But okay, just some basic introduction about that. Just know. But just also just imagine what if it's after 20 years, it will still decreases, right? So that is the reason. It will 3 times after 20 years with the current inflation 6%. Okay. So now everyone understand the importance of investment. Now the question comes, where to invest and how can I invest? Okay. So now you know the basic equation. The inflation is 6%. So we should invest in some medium such that it will give more than 6% returns. Minimum 6% should be given so that the current value of money won't decreases. Understand? Yeah, if any of you any doubt, you can unmute and ask at any time. Okay, I hope this section should be somewhat interactive so that I can able to clarify it out, because I didn't made any PPT for that. It is not going to be any formal session. If I have any doubt in between, you can just unmute and ask. Okay. Yeah. So coming back here, what I'm saying is you need to find the investment product. Any investment product can be, it can be a bank FD or a mutual fund. A mutual fund I come to later. It can be post office savings scheme, or it can be any other government savings scheme, anything else. But you should make sure it should at least give 6% inflation. Then only your money will not deteriorate its value. Understood? Otherwise, if the particular investment scheme is only giving 4%, so you think you are investing something, but eventually what happens every year, its value decreases by 2%. Okay, and I just want to say one thing to the job goers. Actually, every year you are getting a salary hike of minimum 10%, right? Maximum 10, more than 10%. Definitely, companies won't give you in the same company. So 10% of salary hike after taxation, you will end up with only what, around 6.6%. Provided if current slab is 12 lakhs, okay, I agree. But previously, if you go with 7 lakhs, 7 lakh LPA, your overall salary will be increased by 10%. But after taxation, it will be around only 6.6%. That with the inflation accounted, it will be reduced to 0.6%. So every year you are getting increment only up to 0.6%. This is the hard truth many people fail to notice. Many people come and talk, they say, I got 10% increment, I got 12% increment. These are relative terms. But when you come in, sorry, these are absolute terms actually. When you compare it with relatively with inflation, it's only 0.6% to 1 or 2%. That is the main reason why middle class people are always staying in the middle class. Okay, nothing into politics, we are just diving into. So I said, now the question is, what are the investment returns of the major investment products? When you take into consideration about the bank FDs, max to max, they can give around 6% to 7% for a normal citizen, 7.5 to 8% for a senior citizen. Okay, this is what we can expect from a bank FD. Clear? But when you go to some small microfinance companies like some Muthoot Finance like that, they can give something around 10 to 12, 11%. I agree, but they are not government backed actually. They are not RBI backed. If anything goes against the microfinances, say for example, if the company became default, there is no guarantee for the money to return. Okay, and I hope everyone also know that every savings account or every FD account in India, it's insured by the RBI. I think maybe any one of can unmute, man. I just feel like I'm talking alone. Anyone can unmute without any background noise, and he can able to just answer me so that I can be somewhat interactive actually. ஜி நீங்க வேணா அன்மியூட் பண்றீங்களா ஜி? ஏன்னா ஜஸ்ட் ஒரு ரொம்ப தனியா பேசிட்டு இருக்க மாதிரி இருக்கு actually. Sound எல்லாமே. Yeah. So what I'm saying is, every person, every savings account or FD account that we are having, it's insured by the RBI. Okay, only 5 lakh rupees per account. Even though you are having a saving account of 50 lakhs, if suppose the bank become default, if the bank become bankrupt, you can only get 5 lakh rupees for that. Understood, Ji? Yeah. So, but okay. But when you consider into the past criteria, it's been like 3 to 4 decades actually. I can't say 4 decades, 3 decades minimum. No bank became default. And you know the last criteria for S Bank actually, even that also didn't become default. Okay, it's not it not became a bankruptcy. So what I suggest is, as a citizen of India, our economy is safe actually, so you don't need to worry about this. But these things you need to fundamentally know about that. Okay, even and also you should know your bank locker, where you pledge your gold, there is also no guarantee actually. If any theft go happens, that's all, you cannot able to claim for anyone. So that is the reason. So these are the hidden details actually begin every banking sectors in India, right? Any question, Basav sir?
No, Karthik. Am I audible?
Yeah, you're audible, sir. Cool. So yeah, I'm coming to the point. So I said the bank FD is only 6 to 8%. When you go into bank savings account, it's only maximum around 2.5 to 3%. Except IDFC. IDFC is currently giving around 7% actually, but there are a lot of terms and conditions. We can discuss it sometime later. Okay. When we go into other savings account like post office, they are giving around 8%. But the problem is it's 8% only for senior citizens. Okay. So when you go for any safest security kind of thing, max to max you can get only about 7.5 to 8%. That means your money will grow only 1.5% per year averagely compared to inflation. Okay, for example, if I just consider here, say example, I'm investing 10 lakh rupees and with the returns of 7.5. I hope everyone can see the screen, right? Just focus on here. Yeah, with the average return 7.5% for 20 years. Okay, and for example, the inflation. Okay, I'm just putting expenses 0 at the end of okay, I will just go 10 years. Who will look for 20 years? After 10 years, your money will become double. That is what we can look for. But the problem is, after 10 years, what is the value of 20 lakhs? That is the question people will forget to notice. Got it? After 10 years, the value of 20 lakhs will be nothing but 11 lakhs 50,000. That means after 10 years of your 10 lakh rupees investment, it hardly made you a profit of only 1.5 lakhs. How many of you felt wow moment at this time? Felt so depressed actually? Anyone? Manthan, what's your feeling? Yeah, you can unmute and talk, Manthan. So what most of your consultancy and what most of your eye-opening man, cool, yeah. What most of your agents won't say about this thing actually. They will say, if you invest 10 lakh today, after 10 years it becomes 20 lakhs, and your son will get able to get the better education, something like that. But the problem which many people will forget to notice that after 10 years, the value of 20 lakhs is nothing but 11.5 lakhs. That's nothing when your 10 lakh has been grown to profit of only 1.5 lakh extra for the 10 years. That is the problem with 7.5% interest rate for the fixed, I mean, the safest mode of interest rate in the banks, FDs, and other government backed saving schemes. Right? Harish, I hope you can get some point, right? What I'm trying to say. Yeah, cool. So now, so how we can able to overcome this? Raja, what is your view?
To look for some other funds which fetches more returns.
Exactly. That is the exact answer what I'm looking for. So if we want to get something better, we want to invest our hard-earned money in some other product which give us more returns than a mere 7.5 lakhs. However the maximum returns it gives, it's much better. But there is a problem. The universe is always will be balanced actually. Okay. It will not be go up, go down. The problem is when you look for more returns, you will also increase more risk. That is the problem. If, for example, if tomorrow if someone find a product that gives fixed 20% returns, okay, with 0% risk, no risk at all, what will happen? Any idea what will happen?
Everybody will start investing in that.
Yeah, no one will go to job actually. Ambani will sell all his money. I mean, Ambani will sell his company and he will invest the money in that firm and will get the returns. Because Reliance is annual returns is around only 14%. 12 to 14% is as the Reliance annual returns. I can show them in the balance sheet, but it will take more time. So I'm just coming to the point. So Ambani is struggling hard to make 12 to 14% returns per annum with his full company. I'm talking about the entire Reliance industry, not only about the Reliance Power. Okay. So if someone comes with the idea of 20% of the nil returns, nil risk actually, definitely everyone will sell their property, invest in him, and stop going to job. And the entire economy will collapse. That is what happened because no one is going to go to job. And how can the people be able to earn money, right? I mean, people make products and make the survey thing. Yeah. So why I'm saying this point? Any idea? Why I said this point? Okay, I will say actually. The reason why I said this point is tomorrow when someone approaches you and says our company will give you around 50% returns every year, that means he is a bloody scammer. And some company will say we will give fixed returns of around 4% per month. If you calculate 12 months, it will earn 48%. So this is also scammer. So understood what I'm trying to say? Got it? Everyone got some idea, right? Okay, Atul, we just joined late actually, Atul. But I didn't get into mutual fund so far, but just try to understand. So never invest in your money when people are saying anything more than 10% returns, and always check for whether they are RBI backed actually. This is what you should look for. Okay, I'm not into the mutual funds. I'm just giving only the basic fundamental idea. I'm not going anything formal. If I have any doubt at any moment of time, you can just unmute and ask me. Okay. No, coming to back time. So, like Raja rightly said, that I don't do mutual fund. Yeah, cool. But since I also don't do mutual fund because I don't have money. If you have money, you're supposed to do it. Because yeah. Yes, yes. Atul is jokingly saying actually he's not doing mutual fund. I understand what he's trying to say. Because when you have some excess money, only you can able to go for investment. If you don't have money for the basic survival, how do you go for investment purpose and all? Okay, but jokes apart, coming back to the topic, what I'm trying to say is, like Raja usually used to say, you need to find the product which gives investment, I mean returns more than the bank returns. That is more than 8%. But as I said before, as the investment returns increases, the risk also increases. So one of the best investment schemes are we can divide into two types: equity and debt. Okay, I'm not going to go dive deep into this because this is complete theory. With the basic Google search, you can find what is the difference about that. Today, I'm going to only talk about the equity mutual funds because these are the ones which give more returns than the bank returns, and for a long run. I'm not talking about any short term. I'm talking about the long term. Okay. So, okay. So, what is basically equity mutual funds? Equity mutual funds are nothing but when you invest some amount of money in the equity mutual fund, they will invest that in the stock market basically in a particular company. So when the company grows, your amount of share will also grow. But there comes another question: what happens? The company reduces or go to bankruptcy. Definitely, your money also will become affected. That is what we call as drawdown. Okay, the drawdown is nothing but, okay. I will use some technical terms. Actually, I will just give the meaning also. The drawdown is nothing but how much your money dropped from your initial capital. Okay, if it is going up, it's good actually, but it is coming down, that is also need to be considered, because the very first thing which you need to keep in mind is you should protect your capital first, because capital preservation is very much important in all the finance product. Okay. Okay, coming back. Yeah. So when I come to mutual funds, you can see there are a lot of mutual fund types are there. There are a lot of categories. Basically, they can be separated into two basic categories: regular and direct. Just give 1 minute. Yeah, sorry. What I'm trying to say is basically a mutual fund can be separated into two types actually. It's a regular and direct. Regular is nothing but you don't have anything, no knowledge about the mutual fund, and some consultant or agent is going to guide us to invest in the mutual fund. Okay, they will make a charge for it. Like for example, out of every year they will make 1% from you. Okay, in your profit. That is what, sorry, not in profit, in your investment they will make the what I say the charges. But direct means there will be no agent and you will be left alone to capture about the to make your own financial decision, invest the money in your mutual fund. The problem is what happens is, if you charge 1% after 10 years, if suppose you get around 1 crore profit, you're supposed to pay 10 lakh rupees for him, because after 10 years the 1% for it becomes 10% totally, right? So you're supposed to pay him 10 lakhs. This is not in case of direct. But the problem is, suppose without financial knowledge, if you choose on the wrong fund, what happened? Your initial investment of 10 lakhs, instead of growing higher, it will grow down, and eventually it will become gone, totally gone. Understood? So far everyone is clear, right? Yeah. So which kind of mutual fund we need to choose? Direct or regular?
Direct.
Yeah, direct. But for selecting the direct, we should have the basic fundamental knowledge about the mutual fund selections. Okay. Okay. One caution actually, one warning. The method which I'm going to share, I actually learned from one important book actually. The book known as "Let's Talk Mutual Fund" by Monica Hallen. She is one of the pioneer in Indian financial institutions. She has written a lot of books about that. If you got some time, you can the PDF copy is available free in the internet. You can download and study. And also, I just watched a lot of paid courses actually for this to understand about that, especially about particularly from the finance Sharan. That guy gave some good knowledge about how to select the mutual funds. Okay, so and I'm also saying that if you follow this method, I'm not going to say you will get 100% better returns than the other products. I'm not going to guarantee that, because nothing is guaranteed in the finance world. Okay, tomorrow will you wake up or not? That is also not guaranteed. Similarly, nothing is guaranteed in finance world, but there is a probability. Don't look for certainty in the probability. The finance world is a game of probability. If you follow this, the probability of winning is higher. Okay, let me ask a simple question to you. Okay, I will give you a chance to you. There is a bet. 55% of chance you will win 100 rupees, and 45% of chance you will lose 110 rupees. Will you take this bet or not? Except Raja, anyone can answer.
It is neutral, I think.
Will you take this bet or not? Atul, what is saying? It's neutral, right?
Hmm.
What about Basav sir? Your view? Manthan, no. Great. Ashwin, bro. Ashwin, what you said?
I will take the bet.
You will take the bet. Okay, let's analyze the combinations for about 100 trades, actually 100 outcomes. So out of 100 outcomes, you will win 55 times, right? 55%. So 55 and 100 is nothing but 5,500. Let me save this actually. Okay, 45 times I will lose how much amount? 110. So eventually I have 4,950. Okay, so that's nothing but 5,500 minus 4,950. So end I will be in profit of 550 rupees. So it is profit, and you can take the bet. Mandan, why you said no? Mandan, unmute and talk, man. What made you to felt? I don't know. I don't know. Nice answer. Okay. The simple mathematics actually. So this is how the probability works. Eventually, it may sound like, okay, we are going to lose like 110 rupees. What if we end up losing all the time? That is a probability actually. That comes the probability. Yeah, that's a. I'm in a public place, can't pick. Okay, Manthan, I agree. Yeah. What Harish asked is right. What probability we loses all the time, right? There comes the history. We all knows history will repeat itself. Okay. Based upon the past data, we can analyze come to some conclusion that eventually we will win if we follow some pattern. Life is always give some pattern. If you just go, everything will be pattern actually. For example, you can see out of 5 generation, no wealth will be sustained to more than 5 generation. If your grandfather is the richest person, after 5 generation, the possibility of decreasing the wealth generation is around 80%. And 90% of the billionaires today are first generation billionaires. Okay, so that is a pattern. Everything has a pattern in the world. It may be Fibonacci, anything can be there. So that is so. So the condition what I gave is only 55% winning. So just don't think behind the conditions actually. This is a condition. Maybe you can how do you arrive at the condition, that may be differ. Okay, maybe I can give a lot of examples. If you go to casino, okay, no person can single-handedly beat the casino. You know why? You know about the roller game. The wheel will be spinning. You will put the ball, and the ball ends. There will be totally like 36. What is it? 36 black and red will be that edge exactly. That's the edge actually. If you go that, 17 will be. Oh, actually, sorry, it's 35. 17 will be red and 17 will be black. Okay, so there will be 50% of chances if you bet in that to win or lose. But what happens is there is one thing called white will be that this. Okay, I just diverted too much. I will say this example later. But coming back to the topic actually, because it will take more time to discuss about. Okay, coming back to mutual fund. Okay, we agreed actually. Mutual fund are somewhat better instruments to invest when compared to other bank things. We go there. There are a lot of types of mutual funds. There are small cap, mid cap, flexi, sectoral, contra, value, different lot of more than 26 kind of mutual funds are there. But I suggest you to have your portfolio restricted to maximum 3 to 4 mutual funds, not more than that. Understood? Understood, right? Yeah. Types. No. And not about the companies I'm talking about. Talking about the types of mutual funds. Okay. That is a bad. G, you can unmute and just always be unmute, Akshay. Okay. There are a lot of categories on mutual fund. The types is only direct and direct and regular. But in that, there are a lot of categories. These are the 7 categories I listed down. Within that category, there are a lot of companies. For example, small cap, there will be around like 50 companies will be there. We need to select which 50 company we are going to invest.
So
Understood?
each mutual fund is having direct and this other type.
Yes. Every mutual fund will have the direct and regular thing actually. And suppose you are going to invest via any third-party software like Zerodha or Grow or Dun, you will be only investing direct. But if you go in the direct company mutual fund website like Motilal Oswal or anything like Axis Bank mutual funds, there they will have chances for you to go for regular direct. Okay. But okay, I'm not going to touch anything practical as of now. We can have a separate session for practical. Maybe this is the phase 1 actually. Okay. Coming back here. So why I say select only 4 to 5 means, first of all, we will have only less amount of money. Maximum we are going to invest at this moment maybe 10 lakh to 1 crore. That's what we can invest, right? If you going to split that money in lot of mutual fund, what happens is one mutual fund will go up, another will go down. What happens? Your money will be stable. Okay, but I totally agree. There will be a diversification risk will be reduced, but at the end of the day, we need to make some returns. So it completely depends upon your risk appetite. Okay, just give me a minute. Let me drink some water. Okay, so guys, so far I just give only the basic introduction. Now I'm just going to dive deeper. So now if anyone have any doubt at any time, just unmute and ask, okay? Right. So the investment, the first thing about investment is not about the company. It's about your plan. And Atul, you can unmute Atul. I mean, you can mute some.
Okay.
Yeah. So what I'm saying is, the first thing when you start about the investment, the first thing that comes to your mind is what is your objective of investment and how much time you allocated for investment. That is the first thing you need to answer. Before answering that, don't go into any investment portfolios or investment product or any investment agents, okay? Because many people have different objective. For example, I just want to buy a car. Further, I'm just going to save the money. That is short-term goal, right? Because I can able to buy the car in 2 or 3 years. Further, I'm going to investment. So my objective is to buy a car, and that should be within 3 years. I'm very clear about investment. For some people, they want to invest for their child education, child marriage. So the current age of the child is like say 5. So they have 20 years of span will be there. So based upon that, they can able to take some risk. Okay, what I'm trying to say, right? Okay, so if you are long-term investor, you can take some more risk actually. When I say more risk, you can invest on a product which have some instant. I already said no. When the returns is high, the risk will also be high. Okay, if the product is giving 28% per annum return, there is also equal chance it can also go minus 28% at some time. This is how the history says, right? So if you're going for a long term, you can allow the money to play. For example, if you invested like 10 lakh rupees today, next year there's a war and suddenly money went down and the value of 10 lakh became 8 lakhs. What happened? You will be in panic. But you know it's a long-term investment, so you'll be waiting for the money to come to break even and then to grow. Suppose you require this money 10 lakh for buying a car next year, and you thought of increasing to 12 lakh and buy the car, but suddenly the money became 8 lakh. What will you do? You will be panicked. You also need the money emergently. You will book the loss and take the money, right? Understood? I hope everyone clear, right? You can reply with thumbs up. Do you want me to explain it much better? Yeah, this is enough, right? Cool. Right. So what I'm trying to say is, you first fix the duration of your investment. When we say long term, it's minimum 10 years, not less than 10 years. And short term, it's 3 years. Many people say long term is 15 years and short term is 5 years. But I will just say, based on Indian market conditions, 10 years is okay. It's good actually, right? So keep this in mind. Then decide your investment ideology. So coming back here, the first mistake what people will do about investment is they will see the last 1 year returns and go into the investment. Okay, How many of you done this mistake earlier? Actually, first of all, how many of you are in here have in a mutual fund portfolio? No one. Yeah. Yeah. I know that. I know. But it gave a really 2x returns, right? That is the patience. Okay, cool. So I hope I can say no one's having return. Okay, then no issue. But what people do is people go and check the last year returns, and based upon the last year return, they will put the investment. Okay, and I'll just show you one thing. Last year, dividend yield fund gave 43.6%. Okay, let's now check what dividend yield fund returns giving. Okay. Okay, I will share about this website later, man. Actually, currently they are not needed. Maybe I can conduct another session to practical application to that. Loading. Screen out. Mutual funds. Okay, I'm going to dividend yield. Okay. No, you need to sign up. Huh? Okay, I'm just using. Oh, just a minute.
You can use some other site.
Yeah. Okay. Maybe. Yeah, you're right. Actually, why to waste the time in this section? But these are the most important thing. How to select the mutual fund. But I will just come back later. I will directly ask the mutual fund dividend yield fund returns 6 months.
Or you can ask ChatGPT directly.
Yeah, maybe I can try that. First of all. Why it's not loading? Money control will be best actually. I will talk about these things later actually, but okay. I know the results, but I'm just giving the proof actually. So if you see here, the dividend yield returns last 6 months, it gave around averagely. Okay, this one gives somewhat better actually. Just give a minute. Cool. Right. Okay. So if we see here, last 6 months, it gave returns of around average. It gave not more than 1 or 2%, right? How many of you can see here, right? Except this one. This one did great actually. Suppose if you invested without this, any of the mutual fund invested means by only seeing the past year mutual fund returns. Yeah, why my system is so slow?
You can close all the tabs which are not in use. Also the apps.
Most of the apps I just closed actually. I don't know why it's. Yeah, no, Jay, actually, net is connection good actually, but I this kind of lag. Yeah, but nothing else actually. I just okay, it's coming here. Okay, so see here, this Excel I just made around some 10 months back actually, not 10 months. Yeah, I will say 10 months. That time, the year 2023, the returns. 2024, the returns is financial 2023-2024 is 43.6%. That particular year. That means for that particular 6 months, it should not given 24% returns. So if anyone comes with this idea on investing in a mutual dividend yield mutual fund, the next 6 months he won't be end up with what you say, not more than 2 or 3%. Got it? So did it make sense to you, everyone? Hello? Hello?
Karthik,
Yeah, yeah, am I
your
audible?
voice is
Oh,
breaking. Now it's
my
audible.
Hello, yes, audible. Hello.
Okay. Oh yeah. Sorry. That's a backlog actually. Now it's okay. Cool. So yeah. So what I'm trying to say is, so never compare the last year returns and go on and do the investment. That is the first mistake many people will do. Okay. But it so what you're saying, you should not compare returns. No, not like that. What the people are generally saying is, minimum go to 10 years performance or 15 years or 20 years. How much longer will be better, and see the returns which are generated, and based upon that, just give the rankings. Okay. I will just show you the thing actually. And see here, this is the mid cap fund I selected. I will say why I selected the mid cap fund later. You can see the Motilal Oswal, which gave me last 3 years 35.7%. The sudden boom in last 3 years nothing but due to the COVID rush actually. Okay, so if you earned some money from the COVID, you are lucky person actually. Otherwise, just wait for next 10 more years or 15 years. Definitely, we'll get another crash where we can able to make some money, no doubt in it. But when you take an average about 10 years or 15 years, roughly this equity kind of mutual fund can give you around 15 to 20% returns guarantee they can give. That is what I can guarantee you. The mid cap, small cap, and like hybrid funds, the flexi funds, they can earn an average can give you 15 to 20% per annum as a CAGR aggregated for the 10 years returns. I'm just saying, okay. So what I'm saying is, when you are selecting a mutual fund, you go and check their CAGR for the past minimum 10 years, and then decide the mutual fund what you're going to invest. And each kind of mutual funds, for example, if you're going to select a mid cap mutual fund, don't go more than 2 or 3 funds in a particular field, because what happens is, if you go to mid cap, these are the top funds I selected. Okay, maybe in some other case I will just show you how I select these companies. Okay, but the thing is, all of them are performing good. But if I just put all the money here, suddenly, but tomorrow all the mid cap funds fall, what happened? My portfolio will become negative. So I will select only 3 funds from here. Why I need to select 3 funds? Because suppose tomorrow Motilal Oswal is not performing good, but Quant and Edilus can perform good, and it can able to make up my money. So that's why what I suggest you to do is, in a single fund category, you select minimum 2, maximum 3 funds. Here mid cap I selected 3 because I am a kind of a somewhat light aggressive player actually. I can call myself, because when you go to mid cap, you are somewhat aggressive, because mid cap you are investing money in the not in the top 50 companies of the country, but the companies which have the potential to become the top 50 companies. Okay, what I'm saying is, if you invest in the already top 50 companies, their growth potential is less, but they are solid companies. Your money will not decrease, but what happens is your growth will be reduced. But when you go with this mid caps, they have the potential to grow, but at the same time they have the potential to drop also. Understood?
So Nifty next to 50.
Maybe next 50, and it's not next 50 actually. It is after 250. Nifty 250 below 250.
Okay.
Okay. So can anyone can say, except Raja, can say the why we prefer mutual funds than stocks, direct stocks?
Because of the volatility in the market,
Yes, sir.
if you invest in the stock market,
Mm-hmm.
the price might come down very drastically, and the recovery of the price may take a long time. Whereas if you invest in the mutual fund, you were invested principal amount. When the market takes any correction, the amount of price coming down will be quite minimal compared to the
Yeah.
investment directly in the stock.
That is a single word actually which can represent all your sayings. Can you remember that word, sir? Actually, that is one single word.
Volatility.
No. What? Absolutely. Then you don't know what is the meaning of volatility, I guess.
Sorry.
Raja, can you answer actually?
Risk diversification.
Diversification. That is the word actually. If you go and put your all the money in a single stock, tomorrow that stock reduces by 10%, your money also will be reduced by 10%. Got it? But here in mutual funds, the mid cap, if you put them 10 lakh rupees, what they will do is they will split the money and deposit in 15 different companies. So what happened then? If any one company had down perform means your money will reduces, but it will not go into zero. Understood? So the risk diversification, it is a main important term.
Actually, these mutual funds, they use our fund in stocks trading, right?
Yeah, exactly. That's the reason stock markets are going up and down. Who do you think they are trading with? Our money only. Do you think where did they get their money actually?
From us only.
Yeah. If you follow some person like Anand Srinivasan, a Tamil guy actually, he will never advise you to go with this actively managed mutual funds because these people play with our money. They don't care about the stop loss and all, right? So okay. So now I hope you understand about the reason for mutual fund. Okay. I'm just going somewhat. I'm popping from one topic another topic. Okay, next time maybe I try to do better. So okay, now what I did is I will show you the real portfolio I'm managing currently. Actually, I'm managing a portfolio for one of my relative. Actually, I will not say I'm not managing. He was doing something wrong. Actually, what wrong is he was doing a mutual fund from a regular agent. Actually, okay. What happened is if you go with the regular agent, just wait a minute. Did I have the calculation? Yeah, here. Say here, if I go the 10 lakh rupees, everyone can see, right? And so assume my investment is 15% returns per annum. For next 20 years, I'm investing. Okay, well, my expense, the regular expense ratio will be around 1.25. And same thing here. Hello? Everyone can see here? If you go to regular, the expense ratio is 1.25%, they will charge additionally. And for our direct, the expense ratio is only 0.5. If you invest the same fund also, after 20 years, if you invest in direct, you will save around 18 lakhs extra. Got it? Got it, right? So, without moving any muscle, you can save 20 lakh extra by changing that regular to direct. Because when you go to mutual fund, in the name of Edelweiss Mutual Mid Cap Fund, there will be both the regular asset, both direct. Both will have the same expense ratio. So both will have the same market value, but the expense ratio changes. If you see here, when average expense ratio is 0.49, right? But if you go to expense ratio for Edelweiss regular, you can check it on your own actually. If you go there, it will take more time. It is around 1.25%. So eventually after 20 years, you will save 18 lakh rupees, 18.5 lakh rupees. This is the mistake what my relative is doing actually. I just pinpoint this mistake and I said, you better do one thing. You just don't need to change the company which you are investing. But do one thing, just change the type of the mutual fund regular to direct. Don't pay for that agent, just pay for yourself. So this will save around 20 lakhs to you. Understood? Any questions? Okay. So then what I suggested is, so then actually what he asked me is, okay, I will take the money and we just change to direct, okay, but you suggest me some better funds to invest, because that time he was only investing in 4 funds actually. That also in out of the 4 funds, I guess actually okay, I forgot about the old thing actually. Maybe just a minute. Yeah, here. These are the 4 funds he is investing. In the Axis focused fund is very much underperforming. He is earning the annual returns of only around 5 to 6%. Okay. So what I decided is, okay, I will go approach. I will suggest you some funds. You can follow that, and these funds can able to give you some better returns. That's what I suggested them. And this is the fund allocation here. You can see here. I invested 3 lakh rupees for the Edelweiss, Motilal Oswal, something like. You can see everything here, right? Totally 9 lakh invested, and this is the thing here. Mid cap, I totally invested 7 lakhs. Small cap 2.5 lakhs. Flexi cap 4 lakhs. Focus fund 2 lakhs. Sectoral fund 2 lakhs. Index fund 1.5 lakhs. I just invested in like 5 funds actually, because the index fund is I'm not that much fan of index fund, but for their safety I just invested in index fund. Otherwise I end up with only these 4 funds or 5 funds. Got it? And out of these 5 funds, I found these companies actually, 9 companies. Okay. Now, what are the, okay, before going that, you can see here, the funds I invested around October actually. You can see that is the worst time to invest in market, but I'm not making any fresh investment. You agree that? I'm making the investment. He already invested in before COVID itself. He made some good money actually. He invested 10 lakh rupees. The 10 lakh became 19 lakhs actually now. Got it? Whatever fund is book, it is okay. It's not worst actually. It's performing good only. But I changed it because it's from regular to direct. That's the main reason. And moreover, it's already invested. So we need to maintain it. So that's the reason I invested in October. Otherwise, October is a like what I say, it's a market high actually. I hope everyone remember October 2024, right? So and also he is investing not for 10 years, minimum 20 years is investing for his child. So no worry about the market ups and down. Okay, that's the reason I'm invested. We see here, on the December 12, it gave around 4.5% profit, the overall. But at March 1, it gave around minus 14% loss. Okay, that time it was around 2.5 lakhs down actually. But you should not compare like this separately. You should check it with the market performance. When you go and check with the market Nifty performance, the Nifty was down by like around 25% actually. Okay, I talked about Nifty mid cap. So the mid cap Nifty is down by 30% from that of March 12. You can check with the stock actually. If you open the chart, it will, again the system will hang, and I just don't want to waste the time. Understood? But currently, the Nifty mid cap is around like minus 6% down, but our portfolio is only minus 0.4% down. Understood? It's clear? Basav sir, clear for you, sir?
Yes. Yes, Karthik.
So this is the reason actually. So mutual fund is not a get rich quick scheme. Okay, it will develop your money slowly with annual CAGR, cumulative annual growth rate. Sorry, compounded annual growth rate. It is equal to 15 to 18% you can expect. Understand? So currently, we are just going for the mark of 20 years. So be patient. So now I will say the criteria which I made to select this fund. The first important criteria which I select is about the drawdowns, because I already said capital preservation is very much important in mutual fund. Just give me a minute. I just drink some water. Okay. So capital preservation is very much important. When I open the drawdown, you can able to see the selected funds which are selected. I took all the drawdowns of the extreme cases, the worst case scenario of these funds. When you see here, 2020, 2024, these are the drawdowns actually happened. You know, everyone know 2014. Actually, this fund started 2014 actually. 2020 was the biggest drawdown. When you see the drawdown, the maximum drawdown happened from December 17, December 20, April 20. That is nothing but minus 30%. Got it? Got it? And for all the funds, you can be able to see. So on an average, they resulted in minus 25% drawdown for the period of like maximum 2 years. Understood? Or 3 years. So at any time, if you check the market, your invested amount between this period, that money will be down only. But what I'm saying is, it is not a 3-year down. Actually, it's a 1 year down. It happened due to the COVID crash. But during that time, when you check with the Nifty, what happened to Nifty? Nifty was down by 40%. Understood? So if some person invested in index fund, he will be down by 40%. But ours is only down by 25%. So the best criteria for selection of a mutual fund is, when the market is falling, your fund should fall less. But when the market is rising, your fund should rise like a rocket. Understood? So give a thumbs up if everyone is clear for that. Yeah, Mandan clear, Priya clear. Whatever others. Yeah, it's okay, fine. So now see what happened to them during the positive side. When the market is up by 18%, it averagely given 26% actually. It's averagely. Okay, that's what I'm saying. At the same time, during the 2020, when the market rised up again, an average it gave 150% returns. Can everyone understand what I'm trying to say? Sorry, it's around 400% returns during 2020 to 2024. Hello? Can anyone inquire what I'm trying to say? Okay, I will say. What I'm trying to say is, when you invest for the period of 10 years or 20 years, there will come a magic moment like 2 to 3 years, market will rally like anything. During that period of time, your money will double, triple, and quadruple. That's what I'm saying. If some person invested from 2016, during the period of 2020 to 2024, his money will became 4 times. That's what you can see here. Understood? So this is how the patience works. There will be some unlucky person who invested from 2016 and 2014, 2020, he will be invested. He will get a returns of around 150%. He will think, I am happy with it. He will take the money and go out. But next 4 years, it will become 4 times his initial returns. So that is the reason patience is much more important than mutual fund investments. If you want more money, you just start a business, you just do a trading, you just go for a job, you can earn the money. But investment will grow in average speed of 12 to 15, 18% returns per annum. Understood? So never get trapped by any agents or any people which they say they will give like 50% returns per annum like that. Understood? Always ask this one question. If that person can give 50% returns, why he is coming and asking me money from myself? He can go and ask the money from Ambani itself, right? Ambani can be able to invest 1 lakh crore rupees in a single minute actually, and he can able to make like 50,000 crore in a single minute, and he can get the commission of 10%, right? So they are trying to find the people to scam, and we are the scapegoats. Okay, so that's what I'm trying to say. So this is my first criteria, drawdown. So my funds drawdown is less when compared to this, and my funds returns are more when compared to the market. Understand? Next thing, okay, there are a lot of things actually also that. There is thing like expense ratio. How much they are charging money from us actually to maintain our funds. Averagely, they will charge around 0.5%. Okay, definitely, because there is no free lunch in the world. Definitely, they will ask some money. We need to pay that money. Okay, and there are a lot of other factors like rolling returns. I can explain it later actually. Okay, my throat is somewhat paining actually. And there are things like downside upside ratio, and based upon thing we can just select actually. For example, why I selected this top 3 mutual funds from other mid cap mutual funds? Because of this ranking. You can see the Mahindra rank around first thing, Edelweiss rank around 3, Quant Midcap rank around 2. These are the reason I just selected this actually, right? The funds which I invested. Maybe some other, I mean, maybe next week I can just conduct another session where I can.
John, quick doubt. So the expense ratio is for direct or regular?
Direct actually.
So for regular funds, we don't get expense ratio.
You will get regular funds. There will be 1.5% actually, 1.5, 2.5%.
Okay. So that is why we preferred to go for a direct one.
Yeah, exactly. But the problem is when you go to the regular fund, they will give some solid advices actually. But no advice will be 100% sure in stock market. I know you got it right.
Yes.
But what I'm just a minute.
Take a break and walk. This is a reminder. Take a break and walk.
Yeah. Okay. What I'm trying to say is, though they give some advisors, they will charge 1.5% from your returns, not from returns, from your investment. Even if you make money or not, they don't care. They will take the money and they run away. I mean, they will be running their system. So that is the reason why the most of the banks are profitable. Even if you make money, banks, the trading platform or make money, because even if you make money or not, they will make money. Understood, G? So that and okay, I will explain about what is rolling returns and everything apart from that. So, do any of you have any doubts so far what we discussed? Anyone? Let me start. Ashwin bro, any doubt, bro? Atul, any doubt so far?
No.
Mandan, little confusion for me. What is your confusion, man? What is your confusion actually? It's all new to. Okay, fine. Okay, maybe eventually you will get cope up actually, because anytime your money should work for you. Because today maybe you can able to earn some money from trading, but tomorrow you just lost anything. What happens? The savings will save you. That's the reason. Okay, I hope Raja also don't have doubt. Basav, any doubt, sir?
No, Karthik.
Harish, any doubt? Same few things. And okay, fine, cool. Maybe we can have a separate session where you can do one thing. You can just jot down your doubts. Actually, you can text me. I can reply that later. Okay. Okay. Now, yeah. Now what I'm trying to say is I'm not going to dive deep. I'm not going to show you a real-time example how to select the mutual fund, but I will say you how I selected the mutual fund. Next class, I will walk you through how to select the mutual fund. Okay. So the first thing I just know what I already said that I will look for the drawdowns. The drawdown should beat the index actually. Then only select the mutual fund. The next thing about is I will go for returns, annual returns. The annual returns you can just make the point after of this. First to check the drawdowns. Next you go for the returns. The annual return should be minimum 18 to 20%. So this can able to for the past 10 years minimum. So this can able to give me confidence that next 10 years it can give anywhere around 14 to 15%. I'm not that much greed actually. Okay, I'm not that much. So what I say, I'm not so envy. I mean, not, okay. The example is greed actually, right?
So, in simple terms, we can say a healthy mutual fund should give at least 15% CAGR.
Exactly. Healthy equity mutual fund we should give 15% CAGR for the aggregated year of 10 years.
10 years, okay.
Yeah, that's the important thing because if you go and check for the past 3 years, it might have given some huge returns. This due to COVID crash. But you go to 15 years, the returns may reduce due to the downfall in doing the what I say.
Yeah, pre-COVID, post-COVID.
Yeah, pre-COVID, post-COVID kind of thing. So average it should give more than 18%. So we can trust the mutual fund, and the mutual fund can give some around 14 to 15% in future. So that is what Harish asked actually.
So
what
in
is the
other
guarantee?
words, we can also say that we are safe to expect 15% per annum
Yeah,
returns.
14 to 15%.
Yeah, if it is more than that, then we are getting bonus. That's all.
Exactly. So this is the doubt Harish asked actually. What is the probability that we will get more returns? So the probability which I'm saying is based upon the past experiences. Like for 10 years, they given around 20% returns. So definitely next 10 years they can give around 15 to 18. But that is also not guaranteed. That's the reason we need to check up our mutual fund portfolio every once and then. That is also main reason why I selected multiple different terms actually, because there are a lot of taxation problems also there actually. If you just suppose, for example, Edelweiss is not performing good. If I want to withdraw the 3 lakh rupees from the means, I need to pay the taxes for this 3 lakh rupees. Suppose if I invested entire 7 lakh rupees for the mid cap in the Edelweiss, I need to pay the tax for the 7 lakh rupees for the mid cap. You got it? How many I found this is new actually.
You're saying about capital gains, right?
Capital gain tax, exactly. For example, the Edelweiss is performing underperforming it. For example, the entire mid cap mutual funds are performing like 12 to 15% per annum, but the Edelweiss is performing for the past 2 years only giving 4 or 5% returns. Then what will you do? They will take the money from the Edelweiss and deposit some other fund, right? But when you take the money from that, you need to pay the capital gain taxes. Understood, Ji?
Yeah, got it.
But for a capital gain tax, it's free for first to 1.5 lakh profits gained. So you don't need to pay the tax. Suppose if I invested all the 7 lakh in Edelweiss, if my profit is around 5 lakh, total profit is 5 lakh means I need to pay the tax for the entire 4.5 lakhs. I mean 3.5 lakhs.
Okay.
Exactly. But if I invest only 3 lakh from this Edelweiss and the Edelweiss gave only like 1.25 lakhs, I just don't need to pay any taxes. I can take that money and put in some other mutual fund and just walk away. That's all.
So,
yeah.
another quick question. So,
Yes.
per fund ka maximum, what can I say?
Allocation.
No, allocation. Not tax redemption is around 1.5 lakh.
Not for fund actually, for PAN card, for individual person.
Okay. So the overall, redemption for per PAN card is on maximum 1.5 lakh.
1.5 lakhs actually. It's currently. Suppose if long-term capital gains is only source of income, you can get around 2.5 lakhs that exemption. Okay, that is separate task. We can talk for the taxation. Okay. But what I'm saying is, if suppose 1 year Edelweiss not performing, 1 year I can change Edelweiss. Next year if I want to change quant fund, next year I will change quant funds. So I just don't want to pay extra taxes. Understood? What it is? Okay. So once I see the Harish, I hope you doubt got cleared, right? What if the probability doesn't go in our favor? Yeah, cool. So first you check for, you just write down these points alone. First check for drawdown. Next check for returns. See as returns minimum 10 years. 10-5-3 will be better actually. If you have some basic fundamental knowledge about the where they are investing. Okay. Actually, I have the separate document. I don't know where I kept actually. That we can give some better understanding where they're investing, what company they're investing. You can just don't take it that to the mind. Actually, it will be a lot of huge for the person who is completely sitting and doing the finance. You can able to manage that.
No, actually, we can able to see the company's list in
Yes.
Coin app directly.
Exactly. We can see that actually how much percentage they're investing. Everything is. I already took that then and I already just made some Excel out of that. I don't know where I kept the Excel actually, but never mind. Actually, those people are having the 20-25 years of experiences in the finance market. They will definitely have some better edge than us. They will definitely have some inside information. Okay, so just trust them. That's all. That's what I can say. Okay, then what factor you should say is you coming to the rolling returns. That is a term called rolling returns. Okay, can any guess what is rolling returns means? Anyone? Okay, I will say it actually. The rolling returns is, suppose, example, the COVID crash ended at 2020 May, sorry, not May, November, let's say. The market was top at March and the COVID ended at November, it's at the bottom. This is the top, bottom. Suppose any person who invested his money at the March, what will happen? Till the price, for example, say 100 rupees invested and the price became 40 rupees. So till the price come to 100, he will be at loss only, right? He don't know about the COVID crash. He invested in the March, but same thing. If they invested in November, he will be extreme profit, right? So the date which you selected to invest should not affect your fund performance. Everyone got it? Basa sir, you got it, sir?
Yep.
So what I'm saying is, even the 10 years return should not be affected by the date of your investment. Harish, you got it? If Harish and Manthan got it, then I can say yeah, cool. So what I'm saying is, your CAGR should not be affected by the date you invested, right? For example, the person who invested in March 2020 should also get average 12%, 15% returns after 10 years. The person invested in November, he can able to get 18%. That is not a big deal. But the March person should not less than 15% he should get. That term is known as rolling returns. So it will calculate every single day. If you invested that day, after 10 days, what happened? If you invested next 10 days, what will happen? Okay. So today I'm January 1 I'm investing. So 2010 January 1 I'm investing. What will be returns in 2020 January 1? If you invest in January 2, what will be returns January 2? 3. So like this it will calculate. Understood? I hope everyone understand, right? Okay. After such calculation also, it is giving like 17.57% for how many years? 5 years rolling returns actually, averagely. So average 17% returns for 5 years. It should be minimum. You can check it for 10 years also. Maybe I can show you one thing. So this is my 10 years rolling return document for Quant Flexi Cap. For 10 years, starting from 2008 onwards. Okay. Greater than 15-20% time. Sorry, you can see here. 98.76% of the time it gave 20%, more than 20% returns. Got it? Can you have to understand what I'm saying?
Yes, got it, G.
Yeah. So starting from 2008 onwards till that day, if I invested something, maximum it gave 25.57% per annum, and minimum it gave 19% per annum, and average is 21.8% gave for last 10 years. Understood? So like this, I have selected JM also gave 20%. So my date of investment will not be affecting my investment returns portfolio. That is rolling returns. So if you understand this point, you will be clear about that. That 15%, this is nothing but CAGR. I already said about CAGR. Okay. So write down the points. First drawdown, next CAGR, third rolling returns. Got it? So for any doubt? Okay. So downside ratio, upside ratio is very simple. I already said this to you. Upside ratio is nothing but when the market gave, when the index gave 100%, for example, Nifty gave 100% means this particular fund gave 107%. Okay, wow. But when the market is down by 100%, it is only down by 72%. What I'm trying to say, you got it right? So when the market is performing more worst, it should perform only bad. When the market is performing good, it should perform best. Got it?
Yes,
This is what it can. This information can be seen in. You can see in the tickertape.com, Advisor Coach, and one more thing, Morningstar. So these information can be accurate because these are public. I mean, these are public listed companies. So they need to provide their balance sheet every year. We can able to track all the information from there, and it is SEBI regulated. Got it? I hope everyone know what is SEBI. Security Exchange Board of India. So every equity related things, they will be responsible. So we can trust them. So
same like for currency we have RBI, for stock market we have SEBI.
Exactly. For equity market, we have SEBI. Cool. So this is what I'm trying to say, man. Maybe next class I can just walk you through real-time example how I selected this and all. But today class, I hope this is enough, right? This is too much of information single day to consume. Right? So, okay, last but not least, actually, I just showing you. In addition to this, I also checked with the Morningstar. They have their own rating system, like a CRISIL rating system. They will give like gold, silver, bronze, platinum, like that. So the fund which are selected, it is given gold by the Morningstar rating. Right? So these are the one of the factor I just consider for selecting.
So Morningstar is one of the rating agency.
They're not only rating agency, they like a money control, you can say, right?
Okay.
They are
Okay.
a complete
So
finance package.
same like Trustpilot.
Trustpilot. The Trustpilot is very small kind of job. But when you go to money control, it will give finance ideas, finance knowledge, finance advertisements. Everything will be single area.
Okay.
Morningstar, nothing like money control. You can just imagine.
Okay.
So these are everything. If you go here, I just selected all the funds. Why I selected Quant Mutual Fund, Quant Small Cap? Why not Edelweiss Small Cap? Even though there is better actually, the exposure is the inception is only 2019. Okay, when it's a Quant Small Cap, it started 2013. So we have some more data to do the analysis. Did I miss any messages? Anyone message? Okay, no message. So that is the reason I just neglected small cap, but small cap is very, very aggressive. It will rise fastly and also will drop suddenly also. Got it? So based upon the data, whatever decision I made, it's purely backed by data. There is nothing emotional. I don't have any soft corner for any of the mutual funds here. Since I'm handling some other person, I need to be very, very rational. Okay? So everything is data packed actually. Anytime you can also, I can just show you the data actually, why I selected this. That doesn't guarantee the fund will outperform anything else. Okay? Because what I found is for the past 6 months, when compared to Quant Small Cap, Edelweiss Small Cap is performing better. Okay? But it doesn't change my view because I'm backed by data. After 5 years, eventually Quant Small Cap will come to the top again. Understood? So any doubts so far? So currently at today, Friday, my account portfolio is down by 0.4%. So any doubt, or we can just wind up the session actually. Yeah, Ashwin, any doubt? A lot of knowledge in this session. Yeah, cool. I will have this ask later. Okay, fine, cool. Yeah. Okay. Any general doubt you can ask actually here. Any specific goal-oriented doubts you can able to say. Basar sir, any doubt for you, sir?
No, Karthik. I'm okay. Thank you.
Cool, sir. Raja, I hope you get everything cleared, right?
Yeah, G, everything is good.
So I selected mid cap, small cap, flexi, focused, and Tata Digital and index fund. Index fund is to track the market actually, how the market is performing. Today market is performing good actually.
So today is all about introduction to mutual fund, what it is, how it will be performing.
Yeah, not the hand-on section actually. I just show how I did it actually. Okay. So with this information, you cannot go and do the things actually. But
Mm-hmm.
this session can be a handheld session actually. I can open
Okay, so the categories in mutual fund, how each category is designed, everything we can discuss.
Be calm, first 2 years is covered. Mandan say. So lot of things are there, man. Because lot of taxation. If you think about taxes, you will die of it actually. Okay, lot of things in taxes we need to study. Otherwise, anyone know about the inheritance tax actually? Inheritance tax.
The wealth you acquire from your grandparents, parents.
Yes, if you sell it, you need to pay the tax for that also. But currently it is banned actually. But there are a lot of confusion.
But they will have you in some other way.
Yeah. You need to pay the capital gain tax.
That is a new fancy name for inheritance tax.
Exactly. If you just so, for example, if a grandfather just gave your some land worth rupees 1 crore today, if you sell that 1 crore means you need to pay the capital gain tax for the 1 crore based upon the adjustment inflation. But
that is the new name for inheritance tax. That's
But no. Previously, what they had is due to this inheritance, for that also you need to pay this tax. You didn't earn it right now. Your grandfather only earned right. So you're changing from grandfather name to your name, right? So for that you pay the taxes.
Okay. So that is nothing for tax.
Yeah. And I mean tax full tax. Tax within the tax. You are getting income tax actually. Already you are paid your tax for your whatever money you are getting. You already pay the tax, right? That is called income tax. Then also you will be charged for every product you purchases. You pay GST. Why? I already pay the income tax, right? With the same income only purchasing this, right? Then why I'm paying the
not with the same income, the remaining income.
Yes, you will pay GST. You will pay
paying if you're getting 1 lakh means.
Yeah.
Say for example, you'll be paying 20% of it as a taxes.
Exactly.
So remaining you'll be having 80,000 in your hand. In that 80,000, you'll be purchasing some other essentials.
That also
you'll be paying GST.
Yes.
That will be around 12%.
Exactly.
So on the whole, you'll be paying 32%.
Yeah. So if you are a job goer, what I can say is, for nearly 5 months, you will be working for the government.
Exactly.
5 to 6 months, depend upon your tax slab. Okay. So how many of you found this wow moment? Okay, Atul, wow. So don't go to job. I'm not saying like that actually. But you know one thing, businessman will never pay taxes actually.
I guess we can have this topic on some other day. It won't end.
Yes, Mark Zuckerberg paid $1 tax last financial year. Elon Musk paid no tax and all after showing a revenue of around like 150, not 150, like something around 15 billion in profit. He never paid any tax. Actually, he showed in loss actually.
No, you can say in this way. He's the world's richest man, but still he's paying zero taxes.
Exactly, that's also right.
Yeah.
His net worth increased by around like 50 billion actually last not some 3 to 4 years in gap, but he never paid taxes. That is the reason only he acquired Twitter. Okay, that's a separate topic to be discussed. But okay, just do your job, work for the government, and die. That's all.
No, there are many legal loopholes.
Yes.
That is what these ultra rich people make use of it.
Yes, but any job goer, we cannot able to make use of the legal loopholes. Anyway, they will scrutinize you, you pay the tax.
Yes.
That's all. Yeah. So okay, guys. So that's all the session. Today I was traveling Ahmedabad, realized that better die than to live in poverty.
No man, still lot to see, lot to go.
Manthan is talking about the freight crash, I guess. If I died in the freight crash, my family at least would got 1 crore rupees, right? I think they increased to 1.5 crores now. And
that 1.5 crore won't be given just like that.
That was the tax will be there.
Need to wait for 2 to 3 years. Lot of investigation, lot of sitting committees.
You know one thing? Air India insured that flight. He will be getting around 3,500 crore for that.
Yeah.
That is separate topic. Okay, that's separate topic of discussion. Okay, yes. I thought if you no doubt, I can just wind up the session. Okay, cool. Okay, guys, bye. If any personal doubt, you can just text me. Okay, I will just reply that. Bye.
Oh, is a record is there?
Yeah, recording is there actually. Maybe Raja will update that.
Yeah, recording is there, Atul. I will upload.
Yeah. Okay, ji. Bye. Ji.
Bye.